All right, next up on the show is Dan Diaz, the owner of OfMeNow.com, who specializes in providing funding so that self-employed buyers can purchase their dream home. So, Dan, welcome to the show.
Glad to be here. Thank you for having me.
So this is a really cool concept. I remember we had our sit-down at Black Rifle Coffee. That's where I seem to be doing all my sit-downs. And it was cool to learn about what you're doing for self-employed people in particular. Yes. So let's start with how'd you get involved with this, and then what's your mission there?
Yeah, so a little bit about myself. I started as a full-time real estate investor in November of 2015, and the focus that I really wanted to go on had to do with owner financing. Coming from an immigrant background, I later found out that the first home my parents purchased was through owner financing. And this is basically a situation where the seller individually finances the purchase of the property. Later on, I learned that that's usually the way most self-employed individuals have to purchase a home, because if you don't have 2 years of tax returns, you have bad credit, or you write off a lot of things as you should on your taxes, it's really hard to get a traditional bank mortgage. The problem with the traditional model of owner financing is that it sucks for everybody. There's very limited inventory. Sellers don't want to hold a note. Agents have a hard time getting paid. And at the end of the day, buyers have very little inventory to choose from. They are usually not the best homes in the best neighborhoods or in the best conditions. So it's not the kind of quality of homes business owners would like to move their families into. So what we did right around 2018, 2019 is reverse engineered the process where just like Wells Fargo focuses on the money aspect of the transaction, we focused exclusively on the money aspect of the transaction. We carry no inventory to limit our clients. What we do is we take a look at their real-world ability to repay based upon their initial investment and their income, and we raise the necessary capital so that they can purchase any home off the MLS. We operate in the $200,000 to $2 million range. Our bread and butter is, like you would expect it, $300,000 to $600,000. And as long as it's in Texas, the greatest country in the world, we will do the deal. We obviously prefer San Antonio, Austin, Dallas, Fort Worth, and Houston. And that really kind of helps us stay, very, very focused. So we really start with the buyer first. And all of a sudden, the process becomes really nice for everyone involved. The buyer is not limited. They can purchase any home off the MLS. Sellers are happy because from their perspective, it's a traditional sale that they're going to get cashed out on. Agents love us because now they can take a quasi, lead to a fully commissionable buyer. And of course, our investors are very happy because they have very stable, predictable returns on their money.
What's the downside of doing what you're doing?
Great question. So it's not cheap. Just like Cadillac or Bentley is not cheap, we are the higher choice for most buyers. We do require a 20 to 30% total initial investment, which sometimes is a hurdle for some buyers. And of course, our interest rates are not bank rates. We don't get our money from the federal government that is loaning it out at 0%. We raise our money strictly from retired individuals, retired Americans who want to put their money to work. So the interest rates are obviously going to be higher than bank rates. However, even that negative is not a bad deal because they're going to get all the paperwork so that they can write off that interest at the end of the year. At the end of the day, that's what business owners need anyways.
Real quick, when I met you, I asked about the interest rate because I was in real estate.
Sure.
And you said the best thing. It was like one of my favorite. I talked to more than one person about you just because of what you told me. I said, what are the interest rates? Can you share what you told me?
So my general response is, and it's meant to be comedic, and that's the truth. Right now, our interest rates are more or less half of what they were in the summer of 1981. And if you know any history, in 1981, most interest rates were around the 18% range, and that was bank rates for good quality buyers. We try to average about 5 plus prime. Last year, that was about 8.25. This year, it is closer to the 12% range, so it does depend on what bank rates are at the time. But what I love telling people is, what's the interest rate on rent? And usually most people are a little thrown off, and they say, well, there is no interest. Like, well, there is interest. It's so high, you can't even call it interest anymore. You have to call it rent. You have to give it a new name. If you're never going to finish paying it off, guess what? It's 100% interest. And guess what? You can't write it off because it's not called interest. So it really is just a matter of perspective.
Well, and couldn't it be a short-term solution anyway? I mean, people can come in at, say, 10%. I'm just throwing an easy number out there. They come in at 10% because this is what they need to get going, because maybe we're a business owner and we've been doing it for 6 or maybe a year and we don't have the 3 years of returns or whatever that are needed. That could be a starting point, yes?
So we don't advertise ourselves as a bridge product because we don't want to force people to refinance. These are 30-year mortgages, no balloons, no prepayment penalties, no mortgage insurance. However, we do let people know that they're more than welcome to use this as a bridge product. We are the easy button that allows them to not lose their dream home now. They'll lock it in. We can approve you in as little as 48 hours. We can close 18 days after the option period ends. And if you want to start looking to refinance the day after closing, you're more than welcome to. We have had a couple of buyers that refinance within 3 months. We have no restrictions or minimum lock-in periods. We also have buyers that have been with us for 7-8 years, and they like the privacy aspect of things. We can report to the credit bureaus if they want us to, or not report. By not reporting, that actually frees up their credit and purchasing power for their business if they wanted to. So there are advantages to both sides of the equation.
Yeah, I like that.
So if someone's listening and they're like, "Oh, I would love to use that because I cannot qualify for a mortgage," how would they recognize that they're a good fit for you? Because I'm assuming you don't take everybody.
Well, that's true. So the first thing that we do is do you have the initial investment requirement? We do require 20 to 30% total initial investment. And I say total initial investment because it's not just the down payment. That's the down payment, closing cost, appraisals, prepaids, attorney's fees, filing fees, origination, application, earnest money, option money.
Well, you've done
the
this
whole
before.
9 yards.
Yeah.
I've done this before.
It rolls off the tongue.
So
You know
it's
your job, man.
yeah, and it's kind of a way for you to pre-qualify yourself. You're looking for a $300,000 home. Do I have $60,000 to $90,000 to close it? I'm looking for a $500,000 home. Do I have $100,000 to $150,000 to close it? That's the first hump that I cannot help you with. You must have that initial investment in liquid and available cash. Nice thing about us is that I don't really care if it's cash under the mattress. Totally okay with that. Obviously prefer money in the bank, but we do have ways to handle cash deposits. The second is ability to repay, but I've never encountered a business owner that does not have ability to repay. They have income. So generally the second qualification, it just works out itself. It's just a matter of paperwork. If they have that, then they qualify for something very unique and something that I'm very proud of, which is a free initial phone consultation. This does last about an hour. We answer every imaginable question they could have. We go through every step. We go over terms, costs, conditions. The purpose of this initial phone consultation is really a dating phase. There's a possibility that they may be dating me for 30 years and I may be dating them for 30 years. We may be married to each other. So this is where we really get to know each other. I'm a big believer in no surprises. Everything will be laid out. Everything will be disclosed. That way, once they decide to move forward, they know exactly what to expect. I'm a big believer in that.
Yes.
Yeah.
However, to answer your original question, that is sometimes the time where I do decline some clients. I'll give you an example. If a client is very challenging, no, I can't at that time. No, I don't want to go to the website to set up the consultation. Well, why can't you just call me at this time? Well, I just have one question. Can you get with me real quick? Then I realized, look, if you're being a pain in the butt before I've bought the home for you, you're going to be a bigger pain in the butt afterwards. So generally I use that as a pre-qualifier. Do I like you? Am I going to be happy with you? Are you teachable, coachable, trainable? Are you grateful for the opportunity? Are you going to be following my lead? And if you are, then I think we're going to get along great. And if you're not, you might not qualify, and that's okay.
Well, that's huge in any business, I feel like, and that's a level that everyone should aspire to get to. Being able to recognize.
Save you so much headache.
Oh my gosh. Recognize someone who's going to make your life miserable no matter how much money they would make you.
Oh, I know.
100%.
Yeah, I was going to pass that question over to you, Ernie, about is that something that you've run into with your commercial clients?
Well, not so much with commercial. It's more of the residential.
Oh, okay.
You know, you got lots of Karens out there.
And
Karens.
You know,
And a few
here's-
Kens?
Yeah, you know, it's weird because, you know, there's a lot of guys out there, the neighbor, the son, the teenager that's doing it for $20. I'm like, okay, well, you know, go ahead, go for $20 and then call me when he doesn't show up or he does something wrong or whatever. And then you go over there and say, look, it's going to cost you $50 or $75 for doing your residential. And then they want, you know, $150 worth of work. They want you to be there. They want you to, do this outside of the scope of work that we normally was in the plan. And that's where it's like, no.
You guys ever turned into a handyman service?
Yeah, he's like,
can
my
you
guy,
fix my gate? Can you fix my
Trim these trees.
And they expect, they think, oh, well, we're the landscapers guys. They're the lawn guys. Oh, they're paying them tacos or something. Like, no, you know what I mean?
Whoa.
We're professional guys. My guys are in uniform. My guys are, the trucks are all white commercial. And they're like, well, don't worry. It's just going to, it's like 5 more minutes. You have that tool, and like, yeah, but that tool cost me $500 to get. You want that? That's an additional cost. So, yeah, we get them all the time. We used to get them all the time. It's like, you know what? I'm done. So,
Qualifying your folks.
Well,
you ever fire any
yes,
residents?
I have.
Good for
I
you.
have. Yeah.
I apologized for that one time. No, I'm kidding.
And I feel like that's a key difference too when it comes to like people buying their personal homes and commercial contracts, because one is it's all about the numbers, it's all about the cash flow, it's about the expenses, and the other one is an emotional attachment
100%.
to a personal residence,
Good
and
point.
the vibe
Yeah.
has to be vastly different.
And it has to, because statistically, even though it's a 30-year mortgage, it will statistically only last the relationship 7 years. Something will happen in 7 years. And there's about a 65 to 70% chance that what will happen in 7 years will not be pretty. The big D's will likely happen: death, divorce, disease, deployment. So all of those are emotional events in people's life that will bring a tremendous amount of stress, and I will hear some of it, and I just have to prepare myself. Do I like you?
Yeah.
Well.
Yeah, that's true.
Well, that's a very refined way of saying it.
Somber
Do I
way to
like you or
end
not?
Do I
Yes.
like you?
Yeah.
I mean, it's the truth.
Yeah.
Well, if people want
And
to
the
get a
answer is
hold
not
of
always
you-
yes.
That's true. It's true.
Get out of here. If they want to get a hold of you, how can they do that?
For sure.
How do they get in
Oh,
touch
I
with
meant
you?
you, Dan.
Oh, I'm sorry.
Yeah. You haven't given your info yet.
So, no, I'm sorry. So our website is ofmenow.com, OF like owner finance, ofmenow.com. My direct number, if you want to give me a call, it's 210-998-1714, 210-998-1714. My email address is dan.diaz@ofmenow.com, dan.diaz@ofmenow.com. I love connecting with real estate agents. They are our number one source of leads. If you or someone you know has a client that you weren't able to qualify him, I'd love to kind of sit down and see if we can get them into their dream home and get you a commissionable buyer now.
Yeah,
Thanks, Dan.
awesome.
Sounds great.
All right, well, that's going to do it for this show. Thanks, everybody, for joining us. We appreciate that. A quick reminder for our listeners, you can catch our video and podcast versions of the show anytime by visiting our website at satalkradio.com. That's going to be it. Oh, also blogging. We launched blogging. So if you'd like to read, we're doing the transcripts of short clips on the show, not the whole thing. Oh my gosh, can you imagine 30 minutes? But just doing the short clips. But yeah, it's kind of a fun way to get us out there on the SEO for Google.
Yeah, if you're
But,
that person who doesn't want to listen to anything and watches everything on silent, blog it up.
Nice,
There you go.
nice. Well, thank you so much for having us.
Yeah,
bet.
thank you.
Appreciate it.
Yes,
Thank
Thank you.
You guys have a great week, and we'll see you on the next one.
Have a good one.